We have $210,000 invested in the stock market and we've been investing for the past 6 years, but we've recently changed our investing strategy and we'll be sharing what it is and what we invest in this video. Pablo and I have not been investing very much in the past couple of months since we have gone full-time on YouTube. So your job is YouTube? Because we wanted to play it safe just in case our income dropped. Thankfully, thanks to you guys, it has been pretty consistent in the past couple of months, so we are comfortable with investing $2,000 per month. It looks like Queenie and Pablo are starting to earn a decent living from their YouTube channel, so it's time to change the algorithm. $2,000 is around 20% of our income, and we didn't want to invest more because we do have business expenses, we have living expenses, and we also have taxes to pay. Our income isn't an even $10,000 every month, and it kind of does trickle in throughout the month. So we've decided to invest $1,000 twice a month, once on the 1st of every month and once on the 15th of every month. Please also keep in mind that I'm not a financial advisor and this is not advice. I'm just sharing what we personally do. These are the stocks that we've decided to automatically invest in each month. We invest in 2 global ETFs, IOO, which is the iShares Global 100 ETF, and Etfs, which is the BetaShares Global Sustainability Leaders ETF. We personally like these ETFs after looking through the top holdings in the ETF, the regions that it targets, and also the management fees. These are the ones that we like, however, it may be different for you based on your own research. And here are some other options of global ETFs. There's VGS, VDHG, and VEU. Before I continue, I wanted to show you how our automatic investments are set up. In Pearler, I've set up my auto invest schedule. I've chosen this option, which is to make manual deposits and then invest once these funds reach a certain value. When my available funds in Pearler reaches $1,000, then Pearler will automatically invest for me into one of the different ETFs that I have set up in my ideal portfolio, and it will invest in my current lowest weighted share in my portfolio. And by the way, if you would like to check out Pearler for yourself, I do have an affiliate link down in my description below. If you use the code Queenie, then you'll get a free brokerage credit. We also have a US ETF, which is IVV, which invests in the S&P 500, which is the top 500 companies in the US. Some other options of US ETFs include VTS and also NDQ. There are a few different pros and cons of setting up automatic investments. The pros are it saves us time because we do have automatic transfers from our bank account to Pearler. It also takes the emotion out of investing because we have set up our ideal portfolio. Pearler will just be automatically executing those trades on our behalf. You're welcome, Queenie. And it also enables us to build a diversified portfolio without us having to calculate things and rebalance our portfolio because it's all done within the Pearler app. And finally, it enables us to dollar cost average a lot more effectively than if we were doing it by ourselves. Some of the cons of setting up automatic investments is you can't really time the market, which I guess could be a pro or a con depending on which side of the fence you sit on. Timing the market is better. This side of the fence is way better than that side of the fence. No, time in the market is better. This side of the fence is way better. One of the arguments for time in the market versus timing the market is the cost of missing the best days in the market. If you invested $10,000 in Australian shares between 2003 to 2017 and you missed the best 10 days of the market, then it would cost you $12,838 in returns. And if you miss the best 10 days in the US stock market, then it would cost you $15,367. If you miss the best 10 days in the global stock market, it would cost you $9,615. This is one of the reasons why I decide to dollar cost average into my ETFs, because I believe that time in the market beats timing the market. And of course, since you do have these automatic investments set up, it is good to just keep that in mind, because if you do also set up automatic transfers out of your account, you just need to make sure that you really do want to make those trades, and just remember to switch off automatic investments if you ever do need to switch it off for whatever reason. We also have an Australian ETF, which is FAIR, which is the Australian Sustainability Leaders ETF. However, some other options of Australian ETFs include VAS, which is an ETF that tracks the ASX 300. I think it's important to consider brokerage fees when we are investing. As an example, let's look at what the brokerage fees are as a percentage of our total investment. If the brokerage fee is $10, which is around around the average for Australian brokers, and you make a $1,000 investment, then the brokerage fee will be a 1% fee of your total investment. If you make a $500 investment instead of a $1,000 investment, then the brokerage fee will be 2% of your total investment. And if you make a $2,000 investment instead, then the brokerage fee would only make up 0.5%. As we can see, the more that we invest, the smaller our brokerage fee becomes as a percentage of our total investment. So that's why it's important to consider brokerage fees when we are making our investments. And if you would like to help my channel grow as fast as the stock market, make sure you give this video a like and subscribe to this YouTube channel for more content about investing and personal finance. Yes, Queenie, I always like your videos, but what about the management fees? The management fees for ETFs works in a different way to brokerage fees. With brokerage fees, you're typically charged a set dollar amount. However, with management fees, these are typically a percentage. For example, IVV, the iShares S&P 500 ETF, charges a management fee of 0.4%. This management fee is charged regardless of if you have $1,000 invested or $10,000 invested. For example, if you have $10,000 invested in this ETF, which has a management fee of 0.04%, then you will pay $4 in management fees per year. We also have an Asian ETF, which is Asia, which is the BetaShares Technology Tigers ETF. However, some other options of Asian ETFs include VAE and IAA. But aren't you scared of investing? I've heard it's really risky. We're not scared of investing because we have an emergency fund, which is 6 months of our living expenses saved in cash. And we only invest in things that we're comfortable holding for a really long time. Wow, Queenie, do you need some help? Aren't you tired of carrying all those stocks? No, I'm okay. I'm a long-term investor, so I'm going to continue to hold no matter what the market is doing. We have also calculated our income and expenses, so we're only investing money that we're comfortable with and money that we don't need to live. And another reason I'm not scared of investing is because of the returns from the stock market over the long term. These are the returns per year for the S&P 500. Most years have positive returns, however, some years have negative returns, for example, 2018, 2008, 2002, 2001, and 2000s. And here is another graph to show the positive years and the negative years, and as we can see, there's a lot more green on this chart than red. Even though some years have negative returns, the stock market does tend to rise at an average annual return of 10 to 11%. As we can see in this long-term graph, the stock market has had some years where it does have negative returns. However, on average, the stock market does tend to recover higher than its previous highs over the long term. Of course, past performance is not a reliable indicator of future performance, but I think it is helpful to go back through the historical returns for the stock market just to get some perspective. We also have a REIT ETF, which is VAP, which is the Vanguard Australian Property ETF. However, there are some other REIT ETFs, including VNQI and VNQ, to name a few. We also invest in individual stocks and cryptocurrency. However, this is not part of our automatic Perla portfolio. Give this video a like and subscribe to this YouTube channel, and write me a comment below with the word invest in it, just so I know who watched this video all the way through. I really appreciate you. Thank you. See ya.